All right, welcome everybody to today's stream. As usual, I want to go through the general disclaimer. This content is an opinion and is for informational purposes only. You should not construe any such information or other materials as legal, tax, investment, financial, or other advice. Nothing contained in this content constitutes a solicitation, recommendation, endorsement, or offer by any of the parties involved. Up today, I have Eric Wilkinson joining me from Hedge. From the main screen. There you go, Eric. Yeah, got you on screen there. Uh, just like to kick things off with you doing a bit of a general introduction. Kind of tell us a little bit about yourself, how you got to where you're at, and a little bit about where you see things going with yourself and Draft Edge.
Great. Thank you, Andy, for having me here. I started out trading in college and then decided to move to Chicago and worked on the floor of the Board of Trade for about 25 years. I was in the 30-day Fed Fund futures. Um, some people may recognize me from mainstream media. I used to do interviews with Carl Cantonius and Rick Santelli from the floor. Then after the floor started slowing down and I was doing most of my trading online, I decided, why am I in Chicago? So moved out here to Arizona and have been trading online since then. But a friend of mine reached out to me and said, you're really into this fantasy football stuff. Could we do binary options around that? It really got me thinking. And I was like, we can not only just do options on this, we could create futures based on these athletes' performance, just like we are used to with fantasy football. And we look at these point scores, say, for instance, Russell Wilson's expected to score 23 points this weekend. Then what we did is we've just taken those point scoring and turned them in dollar denominated values. So a touchdown's worth $6 rather than 6 points. A handoff's worth a nickel, and a pass is worth a dime. So every yard gain's worth 10 cents, just like we're used to in fantasy. And then the free market price discovery, a peer-to-peer free market price discovery, meaning you and I would trade against each other. If you thought Russell Wilson wasn't going to score 23 points, you might sell me Russell Wilson at 23. And then the free market price discovery fluctuates throughout the game. Russell Wilson does well or doesn't do well, and that's how this market will fluctuate. If he throws an interception, his value might start dropping, and you could get out. And then as his value starts rising, I might be able to get out throughout the rest of the game, trading that. So it's been a long journey. We've been doing it for about 4 years. We're in the process right now of going to Europe. We're looking at the UK to get our FCA license, and that would actually allow us to be an exchange. And we would have a futures product on an exchange that people could come to our app and actually do this with real money. Right now it's in fake money. We give everybody like a paper trading account, kind of like TD Ameritrade will do for you, and just to test the product out. But down the road, our ultimate goal is really to be able to start accepting cash and have this traded as an uncorrelated asset. So that's kind of where we are right now.
Great. So, can you give us just a little bit of an idea of that journey over the past 4 years? Where did things start? What were some of the key milestones along the way? And then obviously we know what that next milestone is you're looking to complete.
So yeah, some of the the big lift in the beginning, coming up with the idea was one thing, but really coming and creating a real futures product was an arduous task. I mean, we've read all the terms and conditions and gone through all of the websites and everything else for, from New York Stock Exchange to the NASDAQ to the CME. And once we got that in our head, we went out and found a coding group, and they were out of the Ukraine. And one thing that we've learned through this journey, one of the major things we learned with talking with coders, coming from just a person off the street that's never dealt with these types of engineers, is we've learned that if you're talking to a coder and you say something as easy as, I need you to go to the grocery and get me a gallon of milk. And he's got that down. And then before he's getting ready to leave, you say, hey, you know what? If they have eggs, get 10. And you know what happens? They come back with 10 gallons of milk. So we've learned to be very detailed in what we're asking for, rather than saying, "Hey, get me 10," and assuming they know we're talking about eggs. We say, "Get me 10 eggs," and make sure we're very redundant throughout that process. Um, we finally parted ways with those guys in the Ukraine. They were starting to write some spaghetti code. We had some auditors come in and look at it and said, nobody else is going to be able to uh, help you if you go any further. Another coder coming in is never going to be able to follow this code base, because they haven't been following standard practices, for one, and two, there's a thing where they write little notes down the side, and there was no notes or anything like that to give the next coder any idea where they left off, where one code was talking to an if then, as we kind of, I don't know if you've ever done any coding at all, but those kind of processes weren't very clear. So we picked up a really good group over in Hungary, and their is Rabbit IT is, I think, their website, but they're great. So they've helped us along the way to not get 10 gallons of milk. And now we've streamlined that process between us talking to them, and picked up a development guy as well that will help keep that buffer, so we're not um, creating a product that is more than MVP. And that's one of the things that anybody building an app tries to avoid, is a big bang type of launch. And that's where you just throw all your ideas out there, you build it, but you really just don't know if the consumer likes what you're thinking. And MVP, being a minimum viable product, is something where then you can put it out there, test, get feedback from your user base, and then adapt throughout that process. And that's something that we've struggled with. My co-founder Wes and I have struggled with, and our development officers really streamline that for us. When we start throwing out too much stuff to him, he's just like, "Okay, we're putting that on the back burner. We'll focus on this and move forward there." So that's helped us on our spend and our burn rate as well. Um, Yeah. So some of the things that we found out through the testing process was, well, one of the main things that everybody really came back to us to say was they wanted real dollar trading. And that's been some of our fall off with our users, is when there's nothing on the line. Like, you're playing fantasy without some kind of repercussion or benefit, then you start seeing people wane. That's why that everybody has, like, you got to wear the pink T-shirt, or you got this crazy tattoo you got to get, or you can win some monetary value. That was the biggest feedback we got from that. Some of the other stuff we received was uh, just location of, like, pictures and things that we had displayed on the platform. One of the things we wanted to do is kind of push the user into uh, performing a trade, and they didn't really like that instant, like, trading, uh, where they would click on something and all of a sudden it would put a trade in. So we put in some buffers there where it's a little bit more obvious, the buy and sell button, and then a bid and offer on the front page, so that they can see a little bit more information, and not really get pushed into a trade, which is what we found out they didn't really like in the beginning. But we thought, if you came on here, of course you want to trade, right? Not everybody wants to do that. They kind of want to watch it. It's kind of like that, the ticker symbol, at the bottom of the screen of a financial news network. Sometimes you want to see what it's trading, but you don't necessarily want to jump in immediately and trade. You want to kind of get your feet wet slowly if you will. So rather than just jumping into the cold pool. So those are some of the major things that we got for the feedback, which has changed our design from the beginning to what we have now. And I think we're pretty happy with what we have. Yeah, so and we've played around with it where we could have competitions and somebody could win something, but and we could still do that where people rather than um, putting in money, they would buy like a ticket or a what's the word I'm looking for? A raffle, kind of enter a raffle in a sense and build it out that way. And then whoever gained the most in value over the course of a week would that money, kind of like the 50-50 at a baseball game where they go around and do that, where somebody would put in a dollar and everybody would put in a dollar to enter this competition, and then we would pay out like 50% of that. So there's definitely other ways to skin a cat, if you will, and monetize. um, but we really feel that this product is another alternative asset that would be completely uncorrelated to the broader market, which is something that we is our mission to create. So ultimately, if you think about it, Tom Brady, despite the fact that the stock market would be down 1,000 points, is still going to perform at his current level. So that being said, there's nothing out there in the financial system right now that is uncorrelated. When gold goes up, it means probably that the equities are going down, and that's a flight to safety. And all of those things, those levers and pulleys, if the dollars goes down, gold goes up, and the dollar starts to strengthen, you can see gold come off. So there's never a safe haven for your money when when you have these levers and pulleys going on in the market. Now, one could say that we are dollar denominated, or if we were in Europe, we would be pound denominated, and there is some uh, risk to uh, currency risk as that fluctuates. But ultimately, the athlete is not going to underperform or outperform based on what the bonds are doing or what gold is doing. So it's something we feel that the broader market really needs to have in their portfolio, to be quite honest. And the other thing is, we believe it's a major way for the retail investor to really learn how to trade. And I've said this time and time again that you don't really need a financial advisor, and a lot of people are afraid to get into that arena and buy and sell with some of the uh, things that go on in the markets where somebody has more money than you, they can push it around. And this way, we've created something that even if somebody has more money than you, it's not like oil or gold where somebody can just drive this market wherever they want. Ultimately, our athletes settle to what they did as a performance on the field. So if an athlete ran for 200 yards, that would be worth $20 because we have 10 cents a point. And if he scored 2 touchdowns, that would be worth $12. So you add all that together and it's worth 32. Doesn't matter if somebody's bidding 34, 35, that it's going out 32, then it settles 32. Whereas oil, somebody bids 100, it doesn't matter what you think or what supply and demand are doing, it's settling that 100, where we will settle through people and base it exactly where the market says that performance value was.
Right. All right. So obviously, big regulatory hurdle to get over here. What are you working on in the meantime? What's the biggest challenge outside of that leading up to it? And then we'll talk about the biggest challenge after that happens.
So we looked into being regulated here in the United States. The problem with getting a license in the United States, one, from the compliance people that we've talked to, they still believe that it might be considered gambling. Um, and to get a license in the United States, with all of the regulatory hurdles that you have to go through, it's about $1 million. And that's basically like going, that $1 million is on red or black at the roulette table. So you aren't guaranteed to get a license even after you spent all of that money. Whereas over in the UK, we have a much lower barrier to entry, and it's going to, our uh, $250,000 is where it's going to be to find out whether or not they believe we are a financial product or not. Now, in the meantime, the nice thing with getting a license over there, the application, you're actually really talking to their authorities throughout, and they are really digging into your business plan and finding out if it really is the way one would describe a financial product. And they continue to ask more in-depth questions about our product, which is, from what our attorneys are saying as well, that is a very good sign. They haven't given us a no. They keep asking us more and more about how we're going to uh, segregate funds and how this market will be settled, and you know if we know our customer, all of those things that financial institutions really have to go through. And they just want to see if we have our ducks in a row at this point. And so far, we've been passing those little milestones along the way. So
So does that mean the rest of the business is just on hold until that happens?
we're still building out and we're monetizing otherwise as well. So we actually have somebody paying us to build them a product. So, our product is based mostly on fantasy values in a sense. And that was our thought process. Well, this other gentleman came to us with a completely other idea as to how to create a futures product. And we said, hey, you know what? We haven't thought about that. That's your baby. If you want to create a software as a service contract with us, we'll build your product for you and put it on our platform. Then we've created a commission structure for these things. He's going to get part of the commission. We'll keep part of the commission, and split it that way. But in the meantime, we are cash flow positive with the software as a service product. So if anybody out there has an idea outside of what we've thought of, we could create a product for them that could be traded on a financial exchange.
All right, so now take me through what happens next. Let's say you get the regulatory approval, everything's good with that, and no more hiccups there. What's the next big challenge?
The next big challenge would really be, gaining that user base, and that's another reason why we went to the UK, because a few months ago now, 1 in 4 people actually wagered on sporting events that were taking place in the UK. I think they had an F1 race going on and a soccer tournament, or maybe even a cricket tournament or a cricket match, and that's amazing to think that 1 in 4 people had money on one of those events at a given weekend. So the acceptance over there is much greater, which is why another reason why we took it over there. But really getting our product and letting them, or getting them to understand fantasy is going to be our probably next big hurdle. Uh, they aren't as much into fantasy as we are here in the United States, which is kind of why uh, daily fantasy games like that DraftKings and FanDuel promote haven't really been accepted over there. Uh, our product, especially our golf product, which is the one that I mentioned with the software as a service, uh, that product over there, I think, is going to be huge. It's very easy to understand. It's not really based on fantasy value. It's actually based on the purse and the probability of someone winning that purse. So, if it's a $2 million purse for the winner, they have like $10 million purses. But if the winner is to take home $2 million, which that's a given, we know that going into the tournament, then we would base our product as a $200 product. And, then you try and create the probabilities on that. Well, if he's a 1 in 4 chance of winning the tournament, you might be pricing him in somewhere right around $25 or
Right,
something like
right, right.
that.
So knowing that you're going into Europe, you've got different sports that are more popular. What work are you doing now to create a cricket-based system, or how do you pick? Do you start with football or cricket or what
And
sport over
soccer.
there?
So sorry, golf will probably be very similar to F1. So F1 has a purse value system. So F1 and that uh, the golf are probably going to be very similar in that regard. Now, F1 is hugely popular over there and one of the bigger things to gamble on. The other aspect would be soccer. We're probably going to be looking at their soccer, creating fantasy values for that. A goal would be worth, say, $5, an assist worth $2. A red card would be a negative value to you, and things like that. Time on the field, all of those things will add to the performance metrics that we have, and all of that stuff would be in our terms and conditions so that everybody can easily see where they are and how to come up with their assumption as to how this athlete's going to perform.
So why not? Why are you not testing that part right now?
Well, because we had the thought that we were going to be here in the United States. So we started with football. We went to baseball after that because then we get a one full year cycle basically out of a sport with a very low, without a lull in between necessarily. And then the person came to us with the PGA golf or the golf product. So we started building for that. It's only been probably in the last 3 or 4 months we've decided to really go after this FCA license. Um, some of the things that have kind of held us back are obviously money, which we're raising capital right now, looking to raise capital right now to get our FCA license. Um, and we're obviously looking at their products. One of the beauties with the way that we've designed our platform is that in a couple of weeks we can launch a new product. So say for instance soccer, just getting soccer out there will only take us a few weeks, maybe a month at the high end to release another sport. So
So if
most of
it's that quick to put that together, then what do you do to test to make sure that you have the right scoring system and that that's working for players and that it's meaningful?
Great question. So what we have is we actually have a product right now. So if you were to download my app, the Draft Hedge app, you wouldn't see PGA right now. So we test that on a back end, and we have people that are testing all of our products on the back end. So we're going to be looking at that, asking our users, do you like this? Is this something that you would want added? For instance, with football, we are looking to test penalties. So that would be a negative value to an athlete because it ticks everybody off when you see a wide receiver do a false start. There's no reason for a wide receiver to ever have a false start. Uh, so that would be a negative value to him because it hurts the team, right? That's a performance metric. So we're looking to test that with our beta testers on the back end. So that's what we call our pre environment, and we have some people working on that. And yeah, obviously we're asking our users what they like and don't like because we don't want to throw something out there that um, doesn't resonate with them.
Right. So how many users do you need to get a good amount of data back on that? And then how long does that part of it take once you 3 to 4 weeks to put together the new template, and then how much time to test before you feel like it would be ready to go live?
So we use about 1,500 testers. Some of them we will pay for. So all of ours were family and friends and some things that we picked up through doing media and asked people to help us with the testing on the back end. For soccer, we would go to our users, are you into soccer? And then possibly go out there, find some people that are into fantasy soccer and bring them on to the back end and test this stuff with them. So a lot of question and answer with them to find out what works and doesn't work. Because, for instance, I've not played fantasy soccer before, and I don't think many people have. So those are some of the things that we find out. Oh, another thing that we found out from our users was they wanted something team based, where that's why our baseball is a lineup of all of the batting lineup for the most part. So it's offensive, but they wanted a team based product. So we started building out the teams for baseball, and now we've done that for football as well. So we do the quarterback and the football, or and the team for football, all the offensive guys.
Right. So one of the things we talk about a lot with startups is traction. And my definition for traction is the KPI that gets better and better over a shorter and shorter amount of time. Now,
Absolutely.
we all want to get to the point where that KPI is revenue of some sort, but we know early on that's not always the case. And we also know that that will change over time. You know, the KPI that you're actually using may shift and adapt depending on the stage of the company. Right now, how would you describe your traction in the market?
Right now, our traction is pretty good. We haven't been doing a ton of marketing here in the United States. We've slowed down on some of our Twitter and our Facebook and things of that nature. We have focused on this CFA, or sorry, FCA. And one of the things we don't want to do, and we found out, is like we were getting the users on, they were experimenting with our product, and then we were seeing them drop off pretty precipitously. The second and third month, we started seeing them return um, much less often. And when we reached out to them, that's when we found out, yeah, we love it, but the fact of the matter is, it's not that fun when there's nothing at risk. So we are waiting to really start building some of our marketing up once we get over to the UK. Thing is, when we do big publicity pushes, we did a CNBC article, and the adoption rate was fantastic on that. So anytime we start doing it, we're seeing more and more people jump on, and obviously we're getting people through word of mouth. But at the end of the day, we're not pushing that as hard right now because we want to start accepting live dollars. And then we think that that's really where we're going to see that explosion and start to push our marketing as well.
All right. So you said you needed the users to do the testing. You're not pushing marketing. Um, what what does that look like for you when you're going into a new market? You need to find those initial testers. How do you go about finding those?
We do a lot of, there's actually, you can get testers through Mechanical Turks, which is a AWS product, and you can actually build it out and ask several questions throughout this process, and then find users that way. That's what we've initially done for a product that we weren't really familiar with. Maybe we've been familiar with everything so far because we did baseball and football, but with baseball, most of our people were, um, fantasy people, and I didn't have a lot of friends, and or the people that were already users of our product weren't necessarily baseball. So we went to Mechanical Turks and basically bought some testers that had played fantasy baseball. So we'd probably do something like that for soccer and or cricket.
Gotcha. And then
That way
for
we get a real good focus group. You know what I mean?
yeah, yeah. Um, so you mentioned that over in the European market, 1 in 4 people had placed a bet. Uh, how do you segment that so that you can understand who would be your best customer early on, and then where do you hope to get to as it becomes more mass market?
Um, the first question, I don't know that I really have a good answer for right now, off the top of my head, but the the environment over there right now is it's saturated with uh, William Hills and the legacy way of gambling, right? And it's really a race to the bottom in a sense where people have to lower their commissions and everything else. And it's kind of similar to what we saw in Vegas, right? Everybody used to love playing blackjack, and all of a sudden it started switching over to uh, Texas Hold'em. And that became the big thing because people started realizing that, or at least believing, I should say, that when they're looking across the table at somebody, they believe they can beat their peer, right? Whereas they kind of know when they're going to the blackjack table or the roulette table or the craps table that they're kind of going up against the establishment. And I think people have started to sour of that a little bit, but it really is one of the only ways to create that excitement around a game. I mean, anybody who's ever placed money on a game or had something at risk for a game knows that it's a lot more exciting. Your endorphins just really start triggering. And this is similar to that Texas Hold'em idea where you are a peer-to-peer, or we are a peer-to-peer market, and you're kind of looking at the other side of the trade and thinking, I'm smarter than that guy. And because it's so outside the box and different from what they've seen all the time and are just inundated with, they're really craving something new. And that's something we found out through our target markets, through our testing with Mechanical Turks and things. uh, Asking accept, how would you be accepting of a new product if the odds were more in your favor, which anything like a financial product where it's peer-to-peer trading, you have better probabilities because the house um, is never going to support liquidity because they don't want liquidity. They want to be able to scalp off of that line and capture the middle, right? So that's how they make their money. They don't make any money on Texas Hold'em, so they had to come up with something. Now they take a percentage of the ante, or a percentage of the gamble at the table, which is why they've started allowing it a little bit more. Some casinos never used to offer Texas Hold'em. This allows the consumer to go out there, feel like the probabilities are in their favor, and we believe from our market research that it's going to really be accepted over there because everybody's got the same thing, and we're going to have something brand new and innovative that I think that they'll accept rather quickly.
As things progress with this, and again, you get past the legal, you start signing people on, things start going. How do you know that you will have been successful at this? What would that look like?
We would be the market of domicile is really what we're kind of looking at. Where we could get to a point where we have the users coming back, and despite the fact that somebody else is probably going to try and create another product, that once we're the market of domicile, then people will think of us when they think of these futures products, and come to our site rather than somebody that comes up with a similar product and maybe their point scoring system is slightly different than ours or something like that. um, you know just like uh, grains have been traded at the Chicago Board of Trade for hundreds of years, or 150 years, despite the fact that other people have tried to create the same futures product. When I was in the 30-day Fed funds pit at the Chicago Board of Trade, which is that interest rate, the FOMC, everybody's been talking about lately. I mean, Powell is talking in front of Congress today about Fed fund future, or Fed funds. And that's the futures product I traded. The Chicago Mercantile Exchange tried to create a very similar product because they felt they had the euro dollars, which was a natural hedge between Fed funds. But because we were the market of domicile and we had that liquidity, nobody was willing to jump ship and go over to the CME and trade that product because they knew that the best market was at the Chicago Board of Trade. So once we've created that marketed domicile, that's when we know we've gotten over that major hurdle. Now, in the meantime, we're always looking over our shoulder. Is somebody coming out with the same idea that has the money backed behind them that they can get this out there a little bit faster than us? So, we're, in a race right now to get our product through the FCA. And once we do that, then the likelihood that anybody uh, can beat us at that point is, starts to fall off a cliff. So, um, that's the worry right now, and that's why we're trying to raise this capital really quickly.
Gotcha. Gotcha. Well, great. I think that gets us a pretty good overview of kind of where things are at and where you're going from here. Was there any question that you had that we can help out with, or?
Well, if we're not looking to do like a Kickstarter type of equity raise, but if anybody knows.
Yeah, we can't do a public solicitation on here, so I had to mute you for that part of it. So yeah, no request for funding on a live stream. Sorry. So yeah, anything else outside of that? Obviously all startups have certain resource needs.
Yeah, absolutely. We're always looking for key individuals that are willing to help us out, especially if somebody knows a lot about compliance. That's something that's a major factor for us going forward with the FCA is making sure that our compliance is top notch. So that is something that we're looking for, people that would want to throw some time our way and work with us, and we can work something out.
All right, awesome. Well, Eric, thanks again for coming on. Look forward to reconnecting in the future, kind of see where things are headed. Obviously, a big milestone coming up with getting the regulatory approval and going into the European market. Should be some fun times ahead.
Yes, we are excited. It's going to be a great 2020, hopefully.
That's what we're all looking forward to.
That's right.
Uh, Hold on, just better be right back with you.
All right, sounds good.
Thanks.